Hello, I'm Elmley Delacour, Communications Manager at the Association of Investment Companies. Earlier today, I caught up with Jonathan Brown, co-manager of Invesco Perpetual UK Smaller Companies in the UK Smaller Companies sector, to discuss the difference he's seen since the UK election result, the impact the recent coronavirus is having on his portfolio, and the effect of the Woodford situation on smaller companies investing in the UK.
Well, the result in the election was thankfully decisive, and I think what the country really does need is 5 years of political stability. One thing that both companies and investors dislike is uncertainty, and speaking to a lot of the businesses we meet, they have deferred big investment decisions ahead of the election. So we feel that companies should be looking to invest in their businesses more over the coming year, and that should benefit growth in the future. The virus has obviously caused quite a big setback in the markets over the last couple of weeks. We see this as long-term investors as an interesting opportunity. The market hasn't really discriminated between good quality businesses and bad quality businesses. There are quite a few names that we've had our eye on for quite some time that are now suddenly back within our valuation parameters. So we think we can buy some interesting companies at good valuations, which ought to help with performance over the next few years. The issue with Neil Woodford's funds was really unhelpful for investors more broadly. I think the main issue really is with very large funds taking big positions in smaller companies. Within our funds, we never buy more than 5% of the issued share capital of a company. So we're not trapped into these businesses in the same way that he was. Also, valuations or discounts rather of investment trusts have actually narrowed since the Woodford issue. So we don't see it as a sustainable problem for the smaller companies sector. Well, the market always presents opportunities within our sector. It's a very broad sector. You can always find interesting businesses with niche exposures. So it's not any particular sector that we're targeting currently. We are looking for businesses with self-help, so they can restructure themselves or invest for growth. We like companies with rollout potential, where they've got an interesting product or service, they can sell more widely. We like consolidation stories, so if a business can increase its scale through acquisition and derive some genuine benefit from that scale, then that's very interesting to us. Also, we're continuing to look for companies exposed to higher growth niches within the economy. These are often online businesses, but not necessarily all of them. So we are still seeing a lot of opportunity within the sector. The sell-off we've seen around the coronavirus, we think, provides quite an interesting opportunity. So firstly, valuations have come back a long way, which obviously makes the market more attractive. And secondly, bond yields have come back even further from the historic lows we've seen previously. So we think equities on a relative basis compared with fixed income look really very attractive currently. And with central banks looking to inject more liquidity into the system, we feel very positive about the outlook for UK smaller companies.
It was good to catch up with Jonathan earlier and to hear that the coronavirus has actually presented some attractive opportunities despite the market turbulence, and that the outlook for smaller companies investing in the UK is a positive one. Thanks so much for watching.